Foreclosures are on the rise, and mainstream media is putting everybody in a panic frenzy. Well, today I'm going to give you guys true market statistics of what's really happening in the foreclosure market and bring you guys a little bit of insight on where the market is right now compared to a year ago, 2 years ago, and normal numbers. And so this will put a little bit of enlightenment for you investors, for you end buyers, as to where the market is. And right now, understand that when mainstream media is looking at foreclosures compared to 1 year ago, we're 153% higher than this exact time last year. Where do we get these numbers from? They're a cumulative of a 6 months worth of data between January and the first 6 months of the year at the close out of June. And so when we look at the market data, most of what we're looking at is through market intelligence. And so their CEO, Rick Sharga, is giving us a lot of information in regards to where the market is, what their analytics and data is for the year. Now, when you compare that number to where we were 2 years ago, we're actually 1% lower in foreclosures than we were at this exact time 2 years ago. So what market intelligence is telling us is that by 2023, in the first half, we'll be back to the normal foreclosure rate that we see in a steady, even market. So for those of you guys who are sitting back going, oh my word, we are in a recessionary market and foreclosures are up 153%, halt yourself for a second, because the market has been so stimulated that people have not been foreclosing on homes. There's been too much money pumped back into the economy. And so foreclosures were at a historical low. And so now we haven't even met the demand of normal foreclosures as a nation. So what are those markets right now that are actually being affected by foreclosures, and which are the best markets for you, the investors, to be buying in that have the lowest foreclosure rates? So I'm going to give you guys the top 5 areas that foreclosures over the last 6 months have risen and are at the highest point that they've been in 2 years, but yet still not at a normal level. So the 2 states that are the highest is Illinois and New Jersey. Those 2 are actually at the highest point of foreclosures anywhere in the nation. Now, there's 3 states that follow. One of them, Ohio, the next is Delaware, and the next one is South Carolina. Now, if you are in those markets where, who builds up in Delaware, okay? It's not a real affluent market. That's one of the reasons that it's not stimulated in regards to the economic growth and where things are actually thriving. And if you look at these markets, they make sense. Look at, these markets are not markets that you should withdraw from. These are markets where investors, if you're looking for single-family home dwellings to go in and invest in, this is the time to start going into those markets, because now you can go back 2 years ago. Now, I look back at my business 2 years ago, and I look at where we were at pre-pandemic and during the pandemic, and when I look at those markets, we were still in an inflated market. I remember thinking and sitting back and telling you viewers back 2 years ago that we were in the beginning, early parts of a bubble. And so hence, hold it on, because when you look at 2008, you look at history, a recession hits about every 10 to 15 years. So we were embarking on that 2 years ago. It just so happened that the pandemic hit. It really hyper stimulated the market. And so now we're seeing numbers. We were seeing numbers that were historical as far as inflation and as far as market values. Now we have to come off of that. And when we come off of that, numbers are going to be high. So when we say they're 153% higher, what does that mean exactly? Let's take New Jersey as an example. When you look at New Jersey, foreclosures are up by 0.12%. That's less than 1/10% of all houses that are on the market. What that means is 1 out of every 155 homes or thereabout is in foreclosure or moving in that direction. It's either delinquent and putting in foreclosure paperwork or is already in foreclosure. So not an abundance of homes, and even those markets are still below the national average from where we were at exactly 2 years ago. So hence, it's not that there's a ton of homes on the market, but there's just more now than there was a year ago, and we're moving back to a normality of that. Now, for you investors, the top 5 markets that have actually seen less foreclosures than we did just this time last year, we're going to look at the best markets. Lake Havasu down 47%, Arizona down 46%. We look at markets like Eugene, Oregon is down someplace in the neighborhood of 27%. Springfield, Illinois is down just shy of 20%. Okay? So even though the state of Illinois is higher, Springfield, Illinois is actually down on foreclosures right now. We look at Shreveport, Louisiana is about 18%. And then we look at markets like Texas, and in particular Brownsville is down by 8% right now in their foreclosure rate. So those are great markets to invest in. Look, ladies and gentlemen, if you're withdrawing from the market as an investor, halt yourself. Just go back 2 years and see where the market was 2 years ago, and that's exactly where the market is migrating to right now, and we're not even quite there yet. So when we look at the market as we move into 2023, we're projected to be back into a normality as far as investment, foreclosures, and where we were at 2 years ago. And if you remember 2 years ago, I was sitting back on camera saying, real estate investors, fix and flippers, stop buying fix and flips. We're already buying inflated homes. And how do you go out and make profits? This is the time to buy land and build houses. Ladies and gentlemen, where the best value is right now in real estate purchases is in the land. Take advantage of mainstream media and what they're telling people out there. They're scaring everybody. They're scaring investors. They're scaring end users. And if you're smart enough and wise enough and you're watching our content, that tells me that you're intelligent in what you're doing as an investor. But in comparison to the mass majority and the masses of the world, this content's not getting out to them. So utilize this content as leverage and go out there and cry wolf as far as what's happening in the market to get yourself depreciated values on the land itself. This right now, ladies and gentlemen, is the time to go out where there's a scarcity in the market and start investing. When I go in and we start investing, we start looking at this stuff, and I'm comparing it to market trends. We have a long way to go as far as hitting rock bottom to this market. We have a length of time to go. So unless our governing bodies, our politicians, on a local level and a national level, really hyper push this, which no president, no governing system wants to tank the market entirely. Now, there are always alternative agendas that fits the market of what the central banks are doing. But as far as on a governmental standpoint, ladies and gentlemen, no politician wants to sink their market while they're in office, because then it makes them look bad, it makes their administration look bad. And although the Democratic administration right now is not looking like they're our golden child as far as politicians, they don't want to tank this market in a fashion where they put us in a position where we're in such a recessionary market that it tanks it entirely. Because they themselves understand, have real estate investment just like you do, just like I do, just like Trump does, just like the Republicans do, the Democrats do too. And so understand that we want to be able to go out there in an even playing field, and as much as we want to see hyperinflation diminish, we also want to take care of our bottom line. So ladies and gentlemen, still a great market to be investing in right now. We just tied up some land in Dallas, Texas. We're tying up more land in the northern Dallas market right now for multifamily. All the research, all the data that we're looking at from all the big brokers, from CBRE, Marcus and Millichap, Colas, Coldwell Banker Commercial, all the data that we're looking at still shows the mass need for housing. And more so than anything, affordable housing. I was underwriting a deal in the Ozarks in Alabama. I mean, one of the markets people really don't talk about. And the population growth is actually going down. And I use this as an example for you guys that are watching this video, because even in declining markets, when one of our inner circle members brought this to me, he said, Jerome, what do you think about this property in the Ozark? And when he first told me about it, I said, oh my God, you can get 50 lots for $300,000? I said, tell me about this. And so I start dissecting the demographics. And I go, the only market that I can see that you can hit there is a Section 8 housing and subsidized housing. And so take a look at this from an unsubsidized to subsidized to unsubsidized play. And let's take a look at this diminishing market and see what there's a need for. So I Google the Ozarks, and the first thing that pops up on Google, and you guys can try this, you can go and put in the Ozarks. Is it a growing population? What is the need for housing in this area? And you may want to do this in your area. And all of a sudden, the first thing that popped up is it said that there's a massive need for Section 8 housing because of low income levels, because of retirees, baby boomers, and there was this mass need. I told them, that's your play. Go in there and do a build to rent business model on these 50 houses, set them up so that you have them for Section 8 housing, you have governmental payout, you can keep them and hold them, or you can sell it based on that business model. And we depict that on 50 houses, he would have close to a $3 million profitability on about a 2-year play. So ladies and gentlemen, there's opportunity everywhere. That's not a demographic that I play in, but I know the market well enough that if you go in, you do your homework, and you pay attention to market trends and demographics in those markets, you yourself can put a business model that'll win for you, your next investment, for any business partners, LPs, GPs, or anybody that's investing along the side with you. You like this content, you want to be notified for more content just like this with market updates in this recessionary market, then pound that thumbs up button, click and subscribe, and I look forward to seeing you next time.